Hey guys, all the content in my video is taken from Century 21 Accounting textbook. Today I'm just going to introduce you to chapter 9.4. We're learning a new journal now, and it's called the Cash Payments Journal. So previously we learned about the Purchases Journal. Now we're going to dig into the Cash Payments Journal. So sometimes in these multi-million-dollar companies who manage a lot of accounts and transactions, they'll use this journal called the Cash Payments Journal to simply record any cash payments, exactly what it says. So before, that journal was just used for purchases. Well, maybe there's one department in the company that just handles cash payments. That's the transfer of literal cash. So if any of the transactions say the word cash, that means it goes in the Cash Payments Journal. So it's a special journal used only to record cash payments. So we'll get into journal transactions on those, but let's talk about trade discounts and cash discounts first. So most manufacturers and wholesalers print out catalogs, and then they maintain internet sites that describe a product. And so when you're looking at a catalog, you see, okay, this costs $25, or on the website, $25. That retail price that they list is called the list price. When a merchandising business purchases a number of products from a manufacturer, the price is usually quoted at less than what the list price is. So they say, hey, they're buying in bulk. A company, a big merchandising company, is buying in bulk from a manufacturer. We're going to give them a trade discount. This trade discount is usually a percentage that is guaranteed that they'll give them for buying merchandise through them. So once you calculate the trade discount, let's say 40% trade discount on a list price of $500, you get a net price of $300. That's the $500 times the 40%, you get $200. Take $500 minus $200 to get a net price of $300. So the company really only has to pay for their merchandise for $300. They pay the net price for the product. They could typically do this, merchandising or manufacturing companies usually do this and offer this big trade discount so that more people buy from them. When you record the journal entry, on the purchasing side, if I say that I got a trade discount, you don't record the trade discount. You just record the net price of it. So we'll learn about that journal entry then. So now we have cash discount. This is a deduction that a vendor allows on an invoice amount to encourage prompt payment. So I'm going to use let's say the maple syrup company, and the company offers a 10% discount if the individual pays within the first 10 days. Okay, that's a cash discount, because maybe a company like the maple syrup company that sells their maple syrup, or another company that sells clothing, or another company that sells supplies, maybe they want their payments pretty quickly, so they're going to offer this cash discount to the buyers. We're talking about companies here, not you individuals, but companies. They're going to offer this cash discount to encourage prompt payments. So when we use this for purchasing goods, we record this cash discount, in something called a purchases discount account. Okay, so we'll get to it with a journal entry, but no, cash discount is an actual percentage that we get to take off of our bill because we're paying early. So here it says purchases discount credit column, and that is that cash discount. So we need to show the purchases discount, which we'll get to an example. So a journal amount column that is not headed with an account title is called the general journal. So if we're not affecting accounts payable, if we're not affecting purchases discounts, and we're not affecting cash, we would use this. But we always affect cash in the cash payments journal. There should always be a number in the cash credit. So let's explain it and try to make a little bit more sense of what to do here. So cash payments of an expense. The entry says wrote a check to Kelser Promotions for advertising, $600. If we write a check, if we have cash, if we have electronic funds, Venmo, PayPal, these are all considered cash payments. So we wrote a check for an advertising expense. So we already have the cash credit. So we know that we are losing $600 in cash because we're paying it out. So that's a credit. Normal balance of a cash account is the debit. So decreasing it is a credit. And it tells us that. It makes it easy. $600 is a cash payment, so we paid that out. Well, what do we use it for? Advertising. So we can write advertising expense, check number 689. And if we have an expense, normal balance of an expense account is always a debit. Okay, so that's the first entry for cash payments for an expense. We can also buy supplies for cash. Wrote a check to Wells Office Supplies for store supplies. Supplies are the things that we use on a daily basis, like pens, pencils, cleaning equipment. Supplies are not things that we're selling. So office supplies, we credited or debited that account because the normal balance of a supplies account, which is an asset, is a debit. Then, of course, we decrease the cash. So we see it again. Supplies, $690 was the check. Because it's not an accounts payable debit, it's not a purchases discount, we don't record it there, we can put it in the general debit, $56.20. Next one says cash payments for purchases. So the journal entry says purchased merchandise from Polar Refrigeration for cash. $480. So this might confuse you because here we see the word purchase and you're like, well, we have a purchases journal. But did we purchase it on account or did we purchase it with cash? Cash. So the purchases journal is only if we buy something on account. Here we just decided, hey, let's just pay cash for this. Most businesses do not do this. But sometimes they do. Sometimes someone might use all the credit up for that company and that company says, hey, you need to start paying us cash for purchases. We don't trust you. So purchase merchandise. So we made a purchase. We use that as the purchases account. 697. The amount was $480. Debit for $480. And credit because we're paying out cash. Purchases, that is normal balance, debit. Here it is, the T account. Next one is cash payments on account with the purchase discount, like we talked about earlier. So when you are offered a discount, you will use the purchases discount credit column. So let's read the problem down below. Paid cash on account to Galley Electric for this much, $627.20, covering purchases invoice number 489 for $640. Okay, so our purchases number, our invoice, was originally $640. Well, this person offers a 2% discount, because it said it, and we ended up paying, they did the math for us, $627.20. I got this number by taking $640 minus $1280. To find the 2% discount, you take the full amount times 2%. So $640 times a 2% discount. Discounts are good. We're getting a discount. That's what you have to think about. When you go to a store and it's discounted, it's good. You want to take the full price times the whatever the sale percentage is, and you get $627.20. So that's how much we're actually going to pay. Paid cash on account to Galley electric for $600. This is what I would do first. $627.20. And right here, this is nice. They calculated that cash discount for you. 640 times 2%. The cash discount is $12.80. 640 minus $12.80 is $627.20. So I want you to see something, because when we originally bought this, we bought it on account from Galley Electric. We bought $640 on account. Now they offer a discount. Purchases discount is what that stands for. And cash. What we did before was we took this and we ended up just paying it off, $640 over here, crediting it, and then debiting the $640, zeroing this balance out. Well, we have a purchases discount now. So the cash for this, in our liability, we still have $640, but we decided to take the discount. So we figure out how much the discount is, $12.80, and we put it into our purchases discount. Purchases discount is a contra asset. When we make a purchase, when we have purchases, they increase on this side and decrease on this side. This is the normal balance. A contra asset is the opposite. So it's going to increase on this side and decrease on this side. So purchases discount has a normal balance of a credit. It's a contra asset of purchases. So let's go backwards here, and it says we had the $640 accounts payable. So we can use the columns right up above here, and I say to myself, I know we paid $627 in cash. Good, the problem told us that. $627 in cash. I know that our accounts payable was $640. So credit to cash for $627.20. Our accounts payable was $640, so we need to debit that. $640 brings that accounts payable balance to 0. But our cash isn't equaling out to $640. So we need to show the difference somewhere. And it's the purchases discount account that we show the differences. So we credit the $12.80. And then our debits equal our credits. This plus this equals the $640. Right here, you can see our debit is $640. Our credits total equal our debits. Okay, so we use this account called purchases discount when we choose to take a discount. Again, I think you've already learned this, but this is 210 net 30 is a common term of sale. So this means 2% discount within the first 10 days. After that, you have to pay the full amount in 30 days. I'm going to stop right there and pick up on the next 2 journal entries in the next video.